What's up, good people? What's up, good traders? What's up, guys? Welcome back to my YouTube channel. Okay, so today we're gonna be talking about how to spot a good trade or a good trend. Okay, so as we all know that in the forex market we have three types of market main structures, which are: number one, we have an uptrend which we call a bullish channel. Number two, we have a downtrend which we call a bearish channel. Number three, we have a sideways trend which we call a ranging channel. Okay, so today we're gonna start by an uptrend, how you spot good trades on an uptrend, right? So our uptrend goes like this, right? So our uptrend goes like this. So as we all know, guys, that the forex market doesn't move straight in a straight line, right? The forex market doesn't move in a straight line. It's always moving in waves. It's always moving in waves. So we get to see waves like these. So this is what we call an uptrend. Because as the forex market will be moving, right? As the forex market will be moving, creating waves. It's either it creates wave going to the upside, or create waves going to the downside. Right. So as a trader, you need to know when to enter and what to look for if you come across something like an uptrend, and how do you spot an uptrend. Okay, so the first thing that you do, right, you have I'm just gonna label these ones. Okay, so guys, when we talk about finding a how to spot a good trade, like finding a good trend and deciding on it, right? It all starts on drawing your trend line correctly. So what you want to do, right, you have to connect your trend line from the first, because this is an uptrend, right? This is an uptrend, and we only take trades from the support line, from the support level, right? So which is the lower level on an uptrend channel, right? So how to draw a proper trend line? You have to connect your trend line from number one to number two. Okay, so you have to connect your trend line from number one to number two. So after connecting your trend line from number one to number two, it's then gonna move, making a higher high, right? It's gonna make a higher high. So after it makes a higher high, we have to wait for it to go down as a correction, as a corrective wave, right? So on number three, that's where you decide what to do if it doesn't break the trend line, right? So on number three, that's when you decide what to do if it doesn't break the trend line. And then, as you know that as a beginner or as a trader that is very careful with his losses or his profits, right, you have to manage your risks. So as managing your risk, it means you have to set your stop loss so that the market doesn't take you all out. and you have to set your take profit, so that when you reach a certain target, the take profit will just collect your rewards, right? So we're still on number 3, right? So on number 3, right, we waited for the market to make a corrective move, right? A corrective wave. So after a corrective wave, after it rejects on the trend line, we know that we have an uptrend. We have a valid uptrend, an ongoing uptrend. So from here, we have to wait for our confirmation candlestick. Whichever confirmation candlestick that's gonna show that now the market has changed its direction from a corrective wave that was moving to the downside, right, to an impulse move that's gonna be moving to the upside, because it's an uptrend. So what you're gonna do is you're gonna set your entry, right? Your entry is gonna be on number 3. Okay, this is where you enter on number 3. So when you enter, maybe you have to put your stop loss right below the wick, right below the wick. You have to put your stop loss maybe right below the wick, right here. So your entry is going to be a buy. Now you have to know where to push your stop loss, right? You have to know where to push your stop loss.
My goodness.
Okay, so you have to know where to push your stop loss. So after buying, you have to look for a resistance, and your resistance is gonna be where your high is, right? So let's say you've bought from this lower high, right, going up. So right here on letter A, that's where your high is gonna be, and there's gonna be a resistance here, right? There's gonna be a resistance. So for you to be safe, this is where your take profit is gonna be, on this resistance that was made by a higher high, right? Okay, the reason why we're putting our take profit here is because there's a resistance here, so the market is most likely to bounce back from this resistance going down. So we don't want to find ourselves in a situation whereby we were in profit, then we didn't set our take profit where it's supposed to be, and then the market starts reversing, going back down to our entry, and then after our entry it's gonna go back to our stop loss. So now it's gonna be like we are playing. This is what people who don't know what they're doing does. So for us who know what we are doing, and for us who don't want to lose our money after a good opportunity like this, we have to set our take profit. Let's say from here we took our profit, right, and let the market play out, right, and then let the market play out, and then from here it came back with a corrective wave, right, and then now it's on number 4. It is still going in a trend, in an uptrend. So on number 4, we do the same strategy that we did on number 3. Wait for it to hit our trend line, and then reject, right, and then reject from here and start moving up, right? So when it moves up, we have to look for our TP, for our target. We're gonna be like, okay, this is where we're stopping, because you gotta know when to quit. So from here, from number 4, we said we're gonna do what we did on number 3, which is buying from number 4. which is buying from number 4. So this one is gonna be our entry point, and down here it's gonna be our stop loss, right? Maybe under the wick, right, of a candlestick, of a certain candlestick. It's gonna be our stop loss. Then we're gonna buy from here, going up to our TP, which is our letter B, and then set our take profit so that when the market reaches our letter B, our point B, is gonna close automatically and we have profits, rather than letting the market reverse back to our entry and our stop loss, you see. So we have to know where to stop. We have to know where to place our take profit if it's an uptrend, right? So this resistance is going to determine whether this uptrend is still valid or not. So if this uptrend is now invalid, right, what's going to happen is you're going to see the market failing to break this resistance and then going back down. As it goes back down, it's going to break the trend line. So once it breaks the trend line, it's going to come back to retest it. We'll see the market failing to break this resistance, then going back down to break this trend line, right, making a lower high, and then breaking this support, right, making lower highs, doing the opposite of an uptrend. Okay, so let me show you an example on the real chart of what we've been doing here, right? Okay, this is a real chart, right? Okay, so we have the first touch, which is our number 1, second touch, which is our number 2. So we're gonna use number 1 and number 2 to draw our proper trend line so that it can guide us to our next touches or our entries, right? As long as number 2 and number 1 touches, it's gonna guide us all the way on our uptrend, right, until it decides to break the trend line that we are using right now, right? Okay, so this is our real chart. So that means from here we used number 1 and number 2 to find an entry on number 3, right? So on number 3 here, this is where we buy, right? So we can see that the market on number 3 couldn't break the trend line. So what it did is from here, so we can see that from here, right, the market started going up because there was a trend line. So it's following the trend line, making an uptrend, right? So from here the market went up. So as the market was going up from number 3, it came here, right? So in this scenario here, right, we're gonna be doing the same thing that we did on those lines, on the previous trend line that we were talking about, right? So this one is going to be our entry point on number 3, and we're gonna buy from here. We're gonna buy from here up to our previous higher high, which is this one, right? Our previous higher high. This is where our take profit was after buying all the way up to our higher high. all the way up to our high. And then after that, we can see that after it reached the high, it couldn't continue going up. It then started going back down. So you see, if you closed from here on your TP, right, you were safe, because what you don't want is buying from here and then when the market gets here, start going back down. Now you're gonna be on negative, or not even on negative, because for you to be on negative, it needs to reach your entry first. So now your money or your profit will start decreasing from where it was when it reached your TP. So the reason why you put your TP on the first high is because you want to be secure. You want to secure all your profit before the market starts going down. Okay, so after it came back down, right, we can see that from here it didn't touch the trend line, because it doesn't have to necessarily touch your trend line for it to start going up, but you have to check if where it reversed, if there is a strong support from where it reversed. Okay, so now we wait for the market to come back down, right, and touch our trend line again. So we can see that it touched our trend line again, even though it broke it with a wick, which is a good thing because it closed inside the trend line, which is a strong confirmation that we need to buy, right? Which is a strong confirmation that we need to buy, because this one is a pin bar. A pin bar, it represents the rejection of a certain structure, right? So that's a bullish pin bar, right? It represents that the market has been bearish all along and then changed as the buyers were in control, right? As the buyers were in control and then it closed as a pin bar. That means now it has changed from going down to going up, right? So if it forms a pin bar like this, we have to wait for this pin bar to close like this, right? Don't enter before it closes, because it might change and start going down. So you have to wait for it to close like this. Then after it closes, this right here is going to be your entry point. This is where you're going to need to buy, right? And below this wick is where your stop loss is going to be. This is where your stop loss is going to be, right? So remember, when you are buying, you need to set your TP, and where do you find your take profit? On a higher high, right? So we're gonna look for a higher high as we go up, right? So this is gonna be our stop loss. So as we're buying the market, right? So this is our. Then we found as we are buying the market, we found a higher high. So this is our higher high. Sorry guys, I'm not good at explaining things, but I hope you get me properly. I'm not good at explaining things, but I wish for you to have the knowledge that I have. So I try by all means to explain. So we're gonna do the same thing that we did on number 3. We're gonna do the same thing that we did on number 3, right?
My goodness.
Right. So after this candlestick closed and formed another candlestick, right? We bought. Then after we bought, we can see that the market continued going up, right? And then after it reached our resistance that was made by a higher high, it actually like is going down, and then it broke it it broke that resistance, right? But then it went back down again, just like the previous setup that we had on just like the previous entry that we had on number 3, right? So imagine if you didn't set your take profit, you see that you'll be missing out on a lot of profits, right? So this is why setting your take profit is very important, because from here you set your take profit, then the market just close with some profit, right? Then whatever it does next, it won't affect you because you're already out, you've already took your profit, right? And your account is still growing by just following these steps. Your account is still growing by following these steps, right? Then again, we wait for the market to hit our trend line after a corrective wave, right? We wait for it to hit our trend line, right? So as it hit our trend line and then rejects, and as you can see that it made an engulfing bullish candle, which means we had a bearish candlestick, right? And then we had another candlestick that formed, but it moved way past where this bearish candlestick opened, right? And it was longer than this bearish, so we have an engulfing. That is a bullish rejection candle that tells you that now it is time for you to buy, and the trend line is still valid, right? So you do the same step. So if you wanna, you can decide whether to take this one just right after the closing of this engulfing, which is right above this previous resistance that we used as take profit on our previous entry, right? Or you can go down to maybe 1 hour and then find an entry while this engulfing is in motion on H4, right? But to be safe, yeah, you can just look for an entry just right above the closing of this engulfing, and then wait for the market to make another candlestick that is gonna be moving
My goodness.
to the upside, right? So if you go to 1 hour, we can see that it came down just a little bit, right? And then started going up. So for you to get like nice entries, right, you can use this as an opportunity to make an entry, because you can see that it touched twice, right? Then it came back in the second touch, then it broke this resistance. Then for you, this will be a good entry, right? Just because on H4 time frame, the market is moving inside an uptrend, right? It's respecting this trend, it's respecting this uptrend, right? So once you enter on H1, you want to go back and set your take profit, right? You want to go back and set your take profit just right above here on the high, because you know that for it to make a high, you have to touch this trend line. Okay, so because let's say you don't have any previous resistance to put your take profit on, so this is another strategy that you can use to put your take profit. So we say on this previous resistance, that's going to be your entry, right, to buy. That's going to be your buy entry, right? So below here where the market touched twice, it's going to be your stop loss. You can see clear if you go down to 1 hour, right? So this one is going to be your entry, right? And your TP is where a third higher high is made, right? So your take profit is going to be this one, where the market is going to go up and touch this trend line. So once it touches the trend line, you know that it's going to go down as a corrective wave, right? So you have to stop, you have to close, or you have to set your TP so that the market closes on its own, so that when it starts going down, you'll be safe, right? And we can see that after this corrective wave, it made another touch here, it made another touch, right? So it's up to you to take it or not. So if this let's say this uptrend is no longer invalid, right, what you're gonna see is it's gonna come here and then go down, then break this trend line, and then retest, and then start going down, making the opposite of this uptrend, right? So this is an example of a good uptrend, how to trade inside an uptrend, right? How to spot a good trade or a good trend just by using these trend lines and these touches, the first and second touches, right? And the rejection candlesticks, mostly the rejection candlesticks that touches the trend line. I hope I made myself clear on this one, guys. I hope you can be able to practice on your own, even though I'm not good at explaining things. You all know that by now, right? I'm not good at explaining things, but I try by all means so that you guys can get to do what I do to spot good trades. So I'm just gonna do the same, but in a different way on a downtrend, right? How to spot good sales on a downtrend. Okay, so now I'm just gonna draw my downtrend. Not that proper, but you can see that it's a downtrend, right? Okay, so this is our downtrend, right? It's the opposite of an uptrend. So on a downtrend, we only focus on sales, right? On sales. So that means the market, we only sell the market when it's moving to the downside, right? So for us to find like perfect entries and perfect trends, we have to take our trend line and join it from number 1 to number 2. From number 1 to number 2, right? So we joined it from number 1 to number 2 just to find an entry on number 3. That means from number 1 we didn't do anything, right? Number 2 we didn't do anything because we didn't know that the downtrend was valid or not. So for us to know that it's valid, we have to look at it from number 3, because we can see that it didn't break number 3, moving to a different direction, right? So we can see that from number 3 the market started going down, right? From number 3 it started going down, just following the trend. So when it touched the trend line, it dropped, right? And then made a corrective wave, and then touched it again, dropped, made a corrective wave to the upside, right? So from here that's why we look for our end from here. That's why we look for our entry, our sell entry on our lower high. That's why we look for our sell entry, and then our TP, our stop loss is gonna be above. It's gonna be above the wick. So as I said, this one is gonna be our entry, and then this one is gonna be our stop loss on this resistance, right? So as we are busy selling, we need to know where to put our stop loss, right? So on this letter A, we can see that there is a support that was made when the market was making a lower low from here, right? From number 2, right? As it dropped from number 2, making a corrective move, right? And then touching the trend line from a lower high, right? So from this lower high going down, we sell from this lower high up to this support on this lower low, right? Up to this support from this. So whatever happens here, we know that we cannot be part of it, because we don't know if the market might go back, right, to a different direction, because this is the first touch. We don't know if this downtrend, we don't know how valid this downtrend is, right? So we're just gonna let the market move and then make a lower low. From the lower low, then make a corrective move, come back to make a lower high, which is number 4, right? So on number 4, we do the same thing, right? On number 4, we do the same thing, same procedure. Okay, so on A, this A, right, this point A is where our take profit is gonna be. This is where our take profit is gonna be. So once we sell and then we hit our take profit on this lower low, right, then we let the market play out to complete a downtrend, then comes back to create another entry for us as a 4th lower high, right? A 4th lower high. So from this 4th lower high, we do the same thing. We sell from this lower high, right? We sell from this lower high. We sell our TP as we said on that lower high, and then as we sell, we're gonna have to set our take profit, and our take profit we're gonna set it on the letter B, which is our support. This is where our TP is gonna be. This is where our support is gonna be. So if the market decides to change the structure, we might see it breaking this support, right, coming to this trend line, breaking it, and then start making higher highs, right? Let me show you on a real chart what it's gonna be like. Okay, this is KCHF from
My goodness.
a daily time frame, right? So I just switched on daily time frame so that I can find a proper downtrend, right? Okay, so as we can see that we have 2 highs here, 2 highs that are equal. We have 2 highs that are equal. So from here we don't know whether the market is gonna make an uptrend or a downtrend. So we have to look for a lower high, a high that is lower than this one, right? So we're gonna ignore this first. We're gonna ignore this first high and start from this second high, right? Okay, so this right here, this one is gonna be our lower high. high, right? This is gonna be our second touch. So our trend line should touch the first high with the second high, with the second lower high, right? One. So it should touch 1 and 2. Then we drag it as it is, right? There we have it. On the third touch, it acted like it's going to break and then retest, but it didn't. So it went back inside. Whenever we see that, okay, from here it broke, and then when it rejected here, we thought maybe it was gonna retest, but it didn't retest, it broke again. So when it broke here, that's where our entry was. So from here we can draw a resistance, right? So from here, that's where we wanna place our entry. Let me just draw another trend line. Okay, so we have a full downtrend. So on number 3, we saw a good opportunity as it broke, going back inside the downtrend, right? So we sold. So as we sold here, we looked back just to find a support level for us to actually find where we're gonna put our stop loss, right? So this one was our support, our lower low, right? On this lower low we have a support. So as we found our entry right here, we sold. So right here you choose where you want to put your stop loss. You can either put your stop loss here because you know that you're safe. The market is broken inside, is broken and went inside, broken the trend line and went inside, right? So you can either put it here just to be safe. If you're really confident with your setup, you can put it right here so that you know that if the market comes back, you know that this trend, this downtrend is no longer valid, because a valid downtrend wouldn't do that, right? So we sold from here. We sold from here, right? And then set our TP on this support, right? Set our TP on this support, because all we wanted was a move, an impulse move from our trend line, right? That was going down, following our trend line, right? So we had it, and then after that we set our TP here, and then we took our profit. Voila, win profit. So after that you can see that the market started becoming very choppy, making small candlesticks, right? Making small candlesticks. It was making its way back to the trend line, back to where we need to find another entry, right? So from here we're gonna draw our resistance. So you can also see that this resistance is very strong, because here the market also touched it, right? It was playing below it. It couldn't break it, right? So that's another confirmation that it is very strong. Let me just zoom in so you can see that the market touched the trend line, right? It couldn't break, so it made a reversal candlestick, right? Which is a bearish engulfing. We are now able to sell from here because the market gave us a confluence of resistance, right? We have a trendline resistance, then this horizontal resistance, and then we also have a bearish engulfing. So which means that the market is going to make an impulse move going to the downside, so we need to be in on that. So we waited for this candlestick to close, and then our stop loss is gonna be just above the opening of this engulfing. So it's either you choose to put your TP right on this lower low, right, or you choose to let it move and then touch this trend line. But as we can see here, it didn't touch the trend line. It went back to the support, right? It went back to the support after it broke it. It went back inside and outside, and then it went down, because I think it went to retest it, right? But didn't retest properly. A signal like this is gonna be playing with your emotions, because you won't know whether to close or wait, right? So
My goodness.
if you want to be very safe, what you can do is from here, right, you can go down to a 4-hour time frame, and then that setup would be bigger on a 4-hour time frame. As you can see, if we zoom in on a 4-hour time frame, this is where our entry was, right, and this is where our stop loss was. So you can see that from here it went all the way to our previous support level, right, where it made a lower low on daily, right? So this is profit. It makes a difference. The market didn't go back to your stop loss. It just continued with you in profit. So it depends on how many trades you take and on how big is your loss size, stuff like that. But this is a winning trade just by following a price action strategy, right? Following a downtrend, because if it's a downtrend, you cannot buy on it in a downtrend, right? You have to look for sales. So from here you can see that it almost touched, right? It almost touched our trend line. But for you to be safe, if you're not seeing anything, don't trade anything, right? But if you know how to take trades from here, yeah, you can take trades from here using other skills, maybe like spotting patterns, price action patterns, because you can see from here, right, there is a resistance from here. So the market couldn't break this resistance, then it came back again, couldn't break it. So from here, right, you might sell from this one and then put your stop loss right here, and then your TP right here, okay, where the previous move ended, right? From here, this is also a sell entry, sell signal. You see, very easy like that, right? So if you look at this one right here, you can see that it broke outside the downtrend. It broke outside the trend line. So that means this downtrend might not be valid anymore, right? So it might just go down. Here and retest it on this support, right? And then start making waves going up, creating an uptrend. See, but for now I'm just gonna end here, guys. So tell me what you think, guys. Like I said, I'm not good at explaining things, but I try to make them clear so that you understand where I'm going with this, what I'm trying to do here, how I make most of my profits. I hope this was useful to you, right? So we'll just keep practicing this method, you see that forex is not that hard. It's only your mind that thinks forex is hard. It's only how you react to losses and how you react to rewards, right? But there is nothing